All right. Hey, everyone. Mark here. Mark P. Markets. Thanks for joining me for another Bitcoin video analysis. Okay, so before we get started, a couple of quick things. If you're new to the stream, please make sure to place your question in the channel now, no matter where you're located there. Hold on, let me get this thing going here. All right. So make sure you put your question, if you have a question about an altcoin or a stock, in the channel now. So when I get to the question and answer portion of the stream, I will be able to answer your question. Okay, so put it now so I can get through as many questions as possible. Also, if you'd like to share what country or what city you're from, that's always a fun fact. Now, so here's how this works. First thing I'm going to do is I'm going to talk about the economic calendar very quickly. Then I'm going to get into my Bitcoin analysis, and then I'm going to spend the time on your questions. Okay, I want to try to spend as much time on your questions as possible. Now, for those of you that have sent me messages recently, I apologize. I'm not able to respond right now. I have an event coming up, and I'm still preparing for that. So once I have that, once the event is whatever, then I can answer your question. Okay, once I conduct that. So I appreciate your patience. Thank you, and I apologize for the inconvenience. All right, so let's get started. This is for educational purposes only. For investment advice, please consult a licensed investment advisor. Okay, let me take that slide off the screen now, and let's talk about the economic calendar. All right, first thing. Hey, everyone. Okay, so let me say hi to a few people real quick. Who do we have? I got regulars. Kai, I got Bill. All right, good to see you. Alex, Dean. Hey, Dean. All right, Steen. Okay. Alex has said hi. Okay, cool. Matt. All right, all my regulars. Levent, welcome. All right. Douglas. Okay, cool. Good to see you guys. All right, Ben, David Gonzalez. All right, good to see everyone. All right, so first things first. Make sure to check your economic calendar. Okay, I can't emphasize that enough because you want to watch out for important events. Now, this week we have only one that's really worth mentioning, and that is on Wednesday, 29th, Fed Chairman Powell speech. Okay, so I don't know exactly what time this person is speaking, but make sure that you are aware. There are also other central banker speakers. Okay, ECB president is speaking, I believe, tomorrow, and a couple of times this week. Also, the Bank of England governor is speaking. So you want to make sure you're aware, especially if you're in Forex pairs. Again, it's not to trade, it's to be aware of the potential range expansion. Chairman Powell may not say anything relevant, okay? And it may be just one big non-event, which is okay. But if there are any surprises in what he says, you can see the market move one way or the other. There's no way to know in advance, okay? Unless you personally know Chairman Powell and he tells you in advance what he's going to say. Then you can figure things out most likely. But if you don't have that information, which it's a crime if you do, then there's no way to know, all right? So it's important to understand that idea. But a range expansion is possible. So you have to be prepared for a risk, okay? Account for that risk, especially if you're in a position. The S&P can be dramatically affected by that. Forex pairs, the dollar, all that kind of stuff. If he hints about something about interest rates or anything like that, the market will be listening very carefully for any types of hints or anything like that. Don't try to figure it out yourself. Let the market figure it out, okay? All right, so that's the most important event this week. On Friday, I believe there's, no, on Wednesday, there's also GDP. That's not important, not really. And on Friday, there's, I think there's a PMI number. There's some kind of number in there. But again, Chairman Powell is the most important, okay? And price action can get very erratic going into that speech because no one wants to take big risks, okay? Market makers know a lot about risk, and large fund managers often know a lot about risk. So they back away, all right, which is the right thing to do. All right, now, let's get into the Bitcoin analysis here real quick. All right, TradingView people, let's see what's going on there. I hope I get some questions over there. All right, okay, all right, Nader, good to see you. Stu, okay, cool. Oh, you have to reset. If the screen is giving you a hard time, here, let me refresh that myself. You have to refresh the browser. I don't know what the story is with there. I could see it on mine. You have to refresh your browser, okay? That's technology for you. All right, so first things first, let's talk about Bitcoin. All right, now everything that I say about Bitcoin applies to your garbage altcoin. All right, so use Bitcoin. I've said this a million times. Use Bitcoin as your gauge for your altcoin, because if Bitcoin can't go anywhere, what makes you think your garbage altcoin is going to go somewhere? You have to understand that these things all trade in a correlation. Bitcoin now is just basically another component of the S&P. A lot of people, no, it's not. Bitcoin is this magical coin that does this and that. It's a component of the S&P. It's institutionalized. So whatever the S&P pretty much does, Bitcoin is generally going to follow. I mean, that's the correlation. That's the way it's been. Maybe at some point that will change, but that's the story right now. Now, here's the thing. If you read my report that I wrote on TradingView that I published yesterday, we have this situation here. I talked about this zone right here as an aggressive sell zone, meaning it's an aggressive resistance. I'm going to talk about what aggressive means in a moment. And then we have this conservative zone over here. So the aggressive zone means it's a minor zone. All right. There's not a ton of resistance there, but if a sell signal develops there, and you're an aggressive trader and you want to short it, that's not a bad place to do it. Now, what I mean by aggressive is the chances of it following through are going to be less. I can't put an exact number on that, but let's just say, if I had to put a number on it, let's just say there's probably maybe a 40 or 50%, maybe 60% chance of follow through if it turns in this zone. Okay. The more conservative, of course, would be up in this zone here. This is the more conservative zone. A lot more resistance there. Why? Do I just magically come up with these numbers? No. You had this old support from back here, okay? 25K to 28K. That was an old support. That was a very significant support. And the market spent some time developing that support, which means there are a lot of traders that are probably stuck in the position around this area. So as price gets back into the zone and it gets closer and closer and closer, more people are going to be happy to break even and sell. So it makes the resistance heavier, right? So I would say that there's probably a greater than 50% chance that this thing retraces and follows through somewhat off of those levels. Again, I have no mathematical way to prove those numbers. It's just basically a way to gauge expectations. Okay, so either way, whether it's the aggressive zone or the conservative zone, either way, this entire area, that entire zone is a general sell area. Okay, that's a general area to anticipate selling activity or bearish reversal. From there, you have to measure your risk, but you have to wait for the setup and the confirmation first. Now, so that's the potential scenario for the week, right? Let's talk about what's going on right now. So we rallied a bit, okay? We came off the 17K low, and it can't even get into the sell zone. So what does that tell you? I mean, just generally, what kind of assumption would you make with that piece of information? You tell me. I'm looking at the chat right now. You tell me. It could not get into this zone. What do you think that means? I'm gonna give people here a moment to answer that. This is the interactive portion of the stream. What do you think that means? Price could not get in here. What do you think that means? You tell me. So Bill says weak. Okay. Okay. Not enough volume. Miami CEO. Hey, good to see you. Still bearish. Okay. Those are good answers. Well, the best answer here is it's weak. This thing couldn't even find the irrational squeeze momentum to get up into this area. So that's an important piece of information. It's weak. There's no question. It's weak. Now, let's look at the opposite side of that. Okay. So it's weak. Yes, I would agree. But so we have a sell signal right here. Okay. This is a super aggressive sell signal because it's not even in the resistance zone. And so the chances of this thing turning in your face are pretty good, right? That's why I wouldn't call something like this. This would be more appropriate for like day trades or whatever. not swing trades. When I do this analysis, I'm talking from the swing trade time frame. Now, so when you have a sell signal like this, if anyone took this aggressive signal and said, all right, I think it's a short, right? And it starts to sell. Yes, you have the sell signal in here, but there's a problem with this. And the problem is when you have a sell signal, the next candle needs to expand quickly, right? That's momentum following through. That's not a quickly expanding candle. So while the market, the candle is still open, right? We still have a few hours. This thing may expand. This is very slow to sell. That could be a problem. Now, keep in mind, we're in a slower market. We have Chairman Powell speaking on Wednesday, low volume. So perhaps, the market's just going to do a little nothing before it breaks, if there's a break. But if you're watching this and you get into like a high volume situation, like say Chairman Powell surprises the market and this thing doesn't want to sell off, that is a sign of strength. Okay. So you have to keep in mind, but when I say strength, I'm talking about temporary strength, meaning it's probably in that situation, if this thing cannot follow through and it finds some sort of support in here over the next couple of days, it's possible to see a squeeze up into these resistance zones, okay? Into these resistance zones. That is what you need to watch out for. So the point of this analysis is not to give you some kind of forecast and be like, oh, it's going to do this. Just trust me on that. That's nonsense. No one knows, okay? I've accepted a long time ago that markets are random and no one knows anything, right? The market knows everything. So if you say something like, well, I think, you're implying that you know more than the market, and no one knows more than the market unless you have inside information. So if you don't have inside information, what you think you shouldn't be thinking is worthless, okay? So it's important to understand that the skill in this game is how well you adjust, okay? Nothing else. All this charting nonsense is just all nonsense, all right? It's the skill, anyone can do that. So that's not really a skill that matters. The skill that matters is how you adjust. So here's the example. This thing gave a sell signal. It's aggressive, meaning there's a less chance of this thing following through. It can still follow through, but I'm very suspicious of it. It may produce another higher low, and you may squeeze into this zone where the higher probability selling opportunity will exist. So how to adjust? If you're short and you see that reversal candle develop, it's probably a good idea to exit the short for a small loss or a small gain or whatever. Now, yeah, it may fake you out. It's always possible, and give you another sell signal over here and then sell off. That's always possible. You have to be open to all possibilities, right? You can't just focus on one and say, yeah, I'm going to wait for this thing to go to 30K. And that's when I'm going to get out of my long. When it goes to 30K, who put you in control of the market? Okay, it may go there, but there's much less of a chance it can even get to 28K. Never mind 30K, right? So any kind of nonsense that you may be consuming by other fake gurus or all this other garbage, if they're forecasting, well, we'll be at 45K by next month, and good time to buy. Please treat it like a cartoon. Would you follow financial advice from a cartoon? Of course, of course I wouldn't. It's a cartoon for children. You're doing the same thing by watching a fake guru. Oh, no, not it. This guy, he's made some good calls. It's the same thing, okay? Stop watching cartoons. They're not good for your account. Just like that analogy I made with the pizza and the fish oil. All right, so is that clear? Does everyone understand that? So we're looking at the possibility of a squeeze. It's always possible, but structure favors a test of the low. And that was the point of my article on TradingView, is this structure, the lower high, which is being basically, it's established, okay? But it could have gone further. That's why I'm suspicious of it, but there is a lower high. Let me just show you something else too. Look at this bearish pin bar right here. See that? That's a clear-cut sell setup. That is a sell setup, and it actually went off. That was a sell signal, okay? And as you can see, there was no follow through. So that right there should have been a loss, okay, if anyone took that bearish pin bar. And pin bars are a nice setup, okay? But the location is not the probability of this location isn't that good. This is basically this area. I look at this as 50-50. Okay, it may work, it may not. You can flip a coin, and that's the same result you're going to get by taking a pin bar in this area. Does that make sense? So if this lower high is established and you're willing to take that chance, and you have the ability to adjust if it's wrong, this thing may test 17K. That's also possible. Now, if I'm confusing you, please let me know. But so we talked about a couple of scenarios here, okay? We have the fake out into the resistance zone, which begins with the lack of follow through. We have the lower high, which can lead to the lower low. Again, people want like specific answers, like, well, which way is it going to go? I don't know. The market knows. Listen to the market, not me. So does that make sense to you guys? So you need to be prepared. And that's what I mean by being prepared and being objective. There's nothing emotional about this. Having a set of rules to help come up with these ideas really helps a lot, because you focus on the rules, not your nonsense, irrelevant, useless opinions that mean nothing to the market. All right. So that's my Bitcoin analysis. Everything that I just said is pretty much going to apply to your altcoins. So I'll still answer the altcoin questions, but if Bitcoin can't go anywhere, where do you think your altcoin is going to go? They all follow this thing. And by the way, the environment has not changed. Okay. Look, let me just show you before I move on to your questions. Let me just show you this. This has not changed. Someone asked me recently, like, why are the bonds important? Why is this such an important gauge? Bonds are a reflection of interest rates. Interest rates are at the root of everything in the economy, everything. So whatever they do is going to affect everything else. And this right here is a lower high in the 10-year note. All right. If this thing, the trend is clearly bearish. So a lower low is favored. If that lower low unfolds, we're looking at a continuation of rising rates. As long as rates are rising, your garbage altcoins are going nowhere, maybe lower, because they are speculative assets like penny stocks. You need speculative money to come in and support them. Rising rates is not friendly to speculative money. You need lowering rates. You need quantitative easing. You need a Fed-induced inflationary environment like we used to have. That's great for altcoins and garbage and speculative assets like NFTs. It is not good for this. Does that make sense? All right. So anyone that has any hope, or anyone that feeds you hope, well, now's a great time to buy altcoins because they're so cheap. They can still get cheaper. That's the environment we're in. The Fed sets the tone for everything, because the US dollar is still the world reserve currency. So whatever they do, everyone has to follow, okay? And they're not supporting the market at all. And they're not creating any more free money. That's what they're doing. At some point, they'll change. And that's when you'll start to see some changes here first. Most likely, the bonds will start pricing it in advance. All right. So let me get to your questions now. All right, moving along here. Okay. So let's go back. I see some questions here on TradingView. Good to see those. All right, cool. So let me jump over here on the other side first. And let me see what I got here. All right, so Euro Franc from Kai, EURCHF, Euro Franc. So, all right, first things first, I want to see the weekly chart. Okay, this is the weekly chart of the Euro Franc. Now, the more recent structure we can see, lower highs, lower low, well, lower low up to here. This is not a lower low just yet, but we still have these lower highs, okay? At this point, I'd say the midterm trend, you can say, is in a range, but the broader structure is not exactly bullish, right? So while you have an area where you can try to play that range, looking for the long off of the range low, it's not favored very well, right? Because you don't have any resistance breaks. That support is more likely to break, in my opinion. So here's the daily chart. So in this situation, basically, you can concentrate on this structure right here, which is the range. You're near the range low. just keep in mind, if you take any swing trade longs, you're going against the much broader picture. So it's possible that you don't get follow through and it breaks that low. It's possible. Again, you have the ECB president speaking a couple of times this week, right? You have Powell speaking. So that those could be enough catalysts to move the euro the wrong way in relative to this thing, meaning the euro would have to go higher. Actually, no, the euro would have to go lower, faster than the franc, and this thing will get hammered, right? Because it's the euro first in the pair. So keep that in mind. So playing alongside of this is aggressive, right? The more conservative thing to do, of course, is wait for the range high if it can get back up there, and that would be your selling opportunity. Leave the middle alone. Don't do anything in here. Excuse me. That's a highly random area. It looks nice after the fact, but anything can happen in there. I mean, that's completely, this is coin flip, a coin flip zone right there. Anything can happen, right? So the higher probability areas are going to be your range high and your range low. You're coming off of a range low. It's going to be more aggressive, like I said, because you're going against the bigger picture. All right. Does that make sense? So if you're going to assign that thing a probability, I would give it a lower probability of it getting anywhere, higher. Also, I would be tighter as far as profit expectations. Like I wouldn't sit there like, the typical retail trader, well, I'm going to hold it all the way up to there because that's where it should go because that's what I think. No. So you want to at least be prepared to start exiting in this zone here, if that's worth your risk, because you want to start getting out earlier. The chances of this thing going higher and higher are low. Okay. So that's the way to form the expectations. Now, our expectations in opinion, I don't know. I mean, I guess they are a form of opinion, right? We have to have some sort of guide or some sort of idea to bet. We're betting with, right? That's what we're going to bet that this is going to happen. That's our bet. But at the same time, we have to keep a very open mind and always realize that we can be wrong very easily. All right. Your typical strategy, like if you go to YouTube and you search strategies, all those strategies that you may find, RSI this and stochastic that and moving average this nonsense, it's all 50%. All right. So keep that in mind. Half the time you will be wrong. If you have a statistical advantage of some kind, right, you can hope to be right maybe 70%, maybe. Okay, which means even if you have something that good, which no one's going to share, by the way, they're not really going to share something that gives you that type of advantage. You still have a 30% chance of being wrong. So you always have to realize that wrong or losing money is just basically a coin flip away. Okay, so just understand that and be prepared to adjust. If you could make those losses small, that is how you get ahead in this game. That's where the skill is. Taking a loss really well. That is the skill. No one wants to hear it. Everyone wants to be fed lies, and they want to buy into that dream. Oh, I made 50K today. Oh, I made $5,000. If I could make that, you could make a couple $100 a day easily. It's all fake. It's all a dream. Okay? Stop buying into that dream if you bought into it. We all start out that way, by the way. We all bought into the dream originally, right? And that's why some of us are still in this game. That's the dream we bought into. And then when you realize that was just a dream, then you decide if you really like this or not. Okay. So that was Euro Franc. Man, that was long. Tuning in. Okay, cool. From Bill from New Smyrna Beach. It's raining over there. It's raining over here too. You must have sent some of that rain over here. That's okay. All right. So my Romanians, cool. Hey, Dean from Brazil. Oh, obrigado. No falo Portuguese. All right. From Brazil, take on USD Brazilian Real. Okay. Pretty okay. All right. Let's take a look. Not sure why. What next few months looks like. Okay. Oh, buying some property in Brazil. Nice. I've been to Rio, by the way. Interesting place. All right. So let's take a look. USD BRL. All right. So let's take a look here on the weekly chart. Now, again, these are going to be, don't worry about why as much. I mean, I don't know what's going on in the Brazilian economy at all. But obviously the dollar and interest rates have been rising. So the dollar is going to be strong against a lot of these currencies. especially if there's any type of economic weakness in these countries. Again, I don't know the situation in Brazil, but here's the thing. This is generally, right, the general trend here is still generally bullish, because this gigantic consolidation that you have dating back quite some time here, a couple of years, right, dating back to that, that's a range. That's a higher or low range. So you have this consolidation taking place, right? And right now, Price is right in the middle of it. So this is a bad spot. If you're looking to take any positions, any speculative positions, this is a bad spot to do it, because again, just like with the Euro franc, this is a 50-50 area. It's right in the middle. It's no good. Anything can happen there. So if you're looking for longs, you should be looking at the range low. All right, now I don't know how this plays into your property strategy, what that means for prices for you, but the range low is obviously where the dollar will have a chance to bounce again, because this thing is generally, the dollar is obviously generally bullish, strong against this currency, but this currency has some strength too, right? And that's why it pushes back. So keep that in mind. The weak areas would be up in here, clearly the range high. So if you're looking to sell anything as far as currency goes, short things, you're looking at 575 area. All right, up in there. Right now, this thing's at 522. So that's your sell zone. And your buy zone is, let's see, what are these lows here? 458. Okay, so the 450 area. Those would be your high probability areas. Anything else is just pretty much noise, okay, until this thing breaks out one way or the other. So, I mean, as far as where this thing will be in a few months, I don't know. But I do know that if the Federal Reserve keeps on their rate raising schedule, there's obviously going to be more strength in the dollar, right? Because when you raise rates, your currency gets stronger. So I would at least, it would be very reasonable to anticipate a test of the range high at least. Okay, does that make sense? So keep that in mind, and keep an eye on the Federal Reserve, because whatever changes they make will affect this thing dramatically. All right, so I hope that helps. And also, it's good if you have a good sense of the Brazilian economy and how that's relevant to the dollar. Again, like I'm not familiar with the economy there at all. All right, Stian. Okay, so Stian, before I get into that, let me jump over to TradingView, because these guys have been waiting and I've not answered one question over here. All right, Nader, thanks for your stream. Okay, do you think that the future rate hikes of the Fed for the year is priced into stocks? I don't know. If Chairman Powell, I know he spoke like a week ago, he had a couple of testimonies or whatever. I don't know if that's what he said, because I never paid any attention to what they say. What I look at is the price action on that day. And then I look at the bond market, right? And I look at how the market prices in whatever he says. So I don't know. If he said that outright, if he said that he's not going to raise anymore, or he's done for the year, or if he's mentioned when he's going to do more stuff for the year, then if it's out in the public, then it's most likely priced in, okay? If it's just speculation, well, he can't do this, well, he can't do that, and all the experts are saying it, then I don't know, okay? So I can't really answer that question, but I don't know what he's been saying. The market's looking for clues from him, and he's either got to say something like, I'm not going to raise anymore, we've over-raised, we're going to take a break, right? And you'll see more of a sustained rally and probably a change, but the bond market hasn't changed yet. And until that changes, it doesn't matter, it doesn't matter. Like the bond market knows everything, right? So even if he says something, if the bond market doesn't agree with it, then something is off, right? So that means the bond market doesn't believe him, or maybe he's just telling the public what it wants to hear. I don't know. I don't know their political position over there, and I don't understand some of the choices that they make. Okay, so I go by the bond market, because the bond market is smart money, and they usually have much better information than everyone else. So whatever the bond market does, that's, that tells me what to think. Okay. Okay. Let me see here. So, all right, that was my answer. That was my question from before. Not enough buying power in the market. Okay. Not enough buying power in the market, Nader said about that question. Well, it's really not a function of buying power. It's a matter of, catalyst, like buying power. There's always buying power, right? There's always money floating around, but people have to have a reason. Big people, I'm talking about, fund managers and institutional, players have to have a good reason to put that money at risk. And there's no reason right now to do that. Okay. Not when the Fed is working against you. You're not going to fight the Fed. If you know anything about what you're doing with a large sum of money, you're not going to fight the Fed with it. Okay. So let me see what else we got here. Good question. All right. Let me see what else we got. Okay. Hey, Ali, good to see you. Miami, can you do a quick S&P NASDAQ chart analysis? Sure. So S&P is probably the most important chart you can be evaluating besides the bond chart. The bond charts are the most important, but this is probably the next on the list. Okay. You should always know where the S&P is going because this is a reflection of the stock market, and the stock market is going to be behind the bond market. Okay. So as far as S&P goes, look at this. So we had a recent rally. This is the weekly chart, by the way. Recent rally, right? Sucking people in because people don't know any better, right into this resistance, right? Old support, which is now hesitant, as we can see, right? 4073 area. I was surprised that it even made it that far. But the thing is, again, markets are irrational. Part of this rally had to do with like Powell speaking the previous week or whatever. He got people happy, whatever, for whatever reason. Okay. And it rallies right into this resistance, right into it. Old support, new resistance. And now we're hesitating a bit. Surprise, surprise. Now, keep in mind, so we're in a bear market. That's clear. Bear markets, people get confused by rallies in bear markets because people, I guess, think that a bear market just keeps going lower very easily. But no, there are rallies. And these rallies are usually driven by short covering. All right, people, they get too short. The market gets, what's the word I'm looking for? Saturated with shorts because it becomes obvious and the whole world gets short over here and then they get squeezed. Okay. That's a function of their own greed. It's not any kind of conspiracy. If the whole world is short, that means there's no one left to continue to short, right? So then they all start buying. And on top of that, new buyers are watching, or at least speculators, they jump in and you get something like this. So understand, if it's short covering, and we're not in an environment for sustainable rallies, how far do you think this is going to go? Not very far. So the further it extends, like if this thing manages to get up into here, this is going to be some nice selling opportunity, okay? Because this market that doesn't have the foundation to turn into like a bullish environment. We need rates to turn first, okay? The rates haven't even begun to turn. The bond market is still bearish, hasn't even turned yet. So any steep rally is an opportunity to sell. Okay, so watch that zone in there. The next resistance is 4073, that area up in there. If it can get there, all right, that would be extreme. But in this area right now, we are in an area to sell. Today's candle, is this thing closed yet? This thing has a few minutes before it closes. That's a bearish pin bar. Okay, so we take out the low of that bearish pin bar tomorrow. You have a sell signal on the S&P. This would be a great options play, by the way, all right, if you know anything about vertical spreads, because they allow you to control the risk much better in case this thing squeezes in everyone's face, because the squeeze can continue. Just because we have a sell signal now doesn't mean it will follow through, right? You need to be prepared, especially since Chairman Powell speaks on Wednesday, right? And the market may get very tight tomorrow, not do a whole lot. And if he says something dovish, whatever, a little hint of some kind, you can see this on Wednesday. All right. So those are the scenarios. Does that make sense? Again, I want you to be prepared for multiple scenarios. There's just no one thing like, okay, it's a short, just get short and I can almost guarantee you'll make money. Just pay me $1,000 and I'll teach you the secret how to do that. Right. Okay. So does that make sense? That's the S&P. Whatever the S&P does, the NASDAQ is going to do it too. These things trade together, right? So I'm not going to go over the analysis on the NASDAQ, but look, the chart almost exactly the same, right? The NASDAQ worked its way a little higher because, you have tech stocks and they tend to be more dramatic, but it's the same story. Does that make sense? So now is not really a good time to invest, by the way. It's never it's never like a bad time, but it's not a good time to invest aggressively. Maybe that's a better way to put it. You want to put small amounts of money to work in the stock market? Okay, no problem. Just keep in mind, the stock market is poised to go lower and is likely to test those lows. So by going in small and taking small bites, you can at least get better and better prices without having to take enormous risk. Keep in mind, when you're working on this time frame, especially if you're on the investor time frame, you're taking the most risk. Okay? And people say, oh, but the market's so beaten up. How much risk can we be taking? There's plenty of room here. Okay? And like I said, interest rates haven't even become favorable yet. There's plenty of room. Let's just take a look at the weekly chart. Plenty of room to go lower. Look at all this room. Lots of room. Oh, it can't be. We're at the bottom of the market. Yeah, the RSI says we're oversold. I'm going to buy some more. Yeah, there's a long way to go here. Okay, now I'm not saying it's going to go all the way to the bottom, but the potential is there. Okay, which means you have to account for the risk. That's the message that I'm trying to tell you. Always account for the risk. Perhaps the market will find a bottom sooner, but the bonds are going to have to prove it first. Okay. All right. I hope that answers your question. Good question. All right. Let me jump over here to Stian Alphen. So Stian, you've asked about this before. Let's take a look. Alphen, I believe, is a European stock, right? On the Euronext. Right. Okay. So let's go to the weekly first. Now, if you notice, there's like a routine to what I do here, right? I mean, I jump around, but I always start out with the bigger picture, and I'm looking for levels. Okay. Now, people that have been with me through my specific steps and what I'm talking about. But people that are not familiar, just pay attention. You know, I'm really going through a routine very loosely. So this stock generally is in a generally bullish trend. Now, keep in mind, this is going to be affected by the euro. What is this thing in? It's in euros. So if the euro continues lower, right? The euro has been generally weak. You may see continued inflation in these stocks. All right, just like the Turkish lira, right? We talked about that. It's been a great example of how the lira has been devalued and the Turkish stock market, all the stocks look like altcoins, right? That's because the lira can't afford to buy as much stock. So the prices are higher. Does that make sense? That's what happens when your currency loses buying power. Everything becomes more expensive because now it requires more of this lira to buy stock. Same with the euro. So as far as that goes, so keep an eye on the euro. As far as like levels go, you're near the range high of this thing. You have a higher low in place right now, right? This higher low situation. This is a weekly chart. So if you're interested in aggressive longs, this is aggressive. You have what is this, a buy signal on the daily chart here? Yes, you do have a buy signal. And if the euro continues lower, you know, you're going to have some pressure favoring this thing to make a new high. So you have that on your side if that's what you're interested in, especially if this thing breaks this level right here, which is what, 94, basically 95. If it clears that, you're likely to test the high. And I would expect that the euro, a weakening euro would help that along. Right. Notice I keep mentioning things like the euro and interest rates. Those components give you important context. So if you're aggressive and you're going for the aggressive long, you can at least make a good argument for that. Now, what you don't want to see is if this thing takes out this support over here, then I would leave this thing alone after that. Okay. Because now you're breaking below the midpoint of the range. You really shouldn't do that, of this more recent range. You really shouldn't do that if this thing is going to hold and break higher. It should not do that. You should always be asking, what should the market not do? If this thing is going to go higher, it should not do that. So that's where you take your loss or you define your risk from and all that kind of stuff. Okay, makes sense? The next buying area then you should be looking for is in this area, right? The range low area, which is what? 72, basically 73 area or 72.50, this area right here. That's the area you're looking for your next long, at least for a swing trade. Does that make sense? Okay, so keep your eye on those levels. But this, at least, you know, you have the euro is working in your favor. The euro's generally been weak. I mean, look at the euro. Does that look like a bullish trend to you? This euro against the dollar. This looks like it's setting up for another lower high potentially, right? Forget this high or low. This is nonsense. It doesn't mean anything if you have a series of lower high lower high, lower high. Okay. So I would certainly be looking for your alpha to be working its way higher, or at least if you're looking for the swing trade, it's worth a try. Okay. As long as you have your risk defined well and you have good reward potential. Does that make sense? Okay. Let me jump along here. So, okay, from Matos, some insight on gold. Obviously, still bear, but general potential once market. Okay, so gold. All right, before you get into gold stocks, it pays to look at gold, right? XAU USD, right? So gold has been having a hard time. Should we be surprised? The dollar has been nothing but strong, right? How is gold going to rally in the face of a strong dollar? So this is gold, spot gold. Can't break this resistance. I don't know why anyone would ever even be bullish on this thing at all. Now, it's been trying to maintain this support, but if we get a continued stronger dollar and the bonds are pointing that way, this thing is only likely to break lower. So I would certainly not be buying gold, all right, or at least not expecting it to go higher anytime soon. If you follow those moron conspiracy theorists that, no gold in Fort Knox kind of nonsense and gold's going to be at 5,000 by next month, I hope you learned your lesson about those fools. All right, let's jump into gold stocks. Let's take a look at NEM, right? Newmont Mining. Looks very similar to that gold situation. So gold is going to be your guide on something like this. And these stocks, again, they can't hide from rising rates. These stocks especially, they're not going to be able to hide from the rising rates. So while they're trying to find supports, and these are definitely much better levels than buying up in here and thinking that they're just getting started. How many times have we heard that story, right? So you're not buying up there, at least you're buying near a low. But the thing is, the environment is not exactly favorable for these things yet. So they can easily test lower prices, right? So if gold breaks, something like Newmont Mining is likely to test like this 59 area, 59.5. I mean, it's at 63 right now. So if you're an investor, I mean, gold stocks, for one, are probably better more for long-term investment anyway. And they're really more of a, like a protection for inflation. And the Fed is fighting inflation. Will we ever have inflation again? Of course we will. And the Fed will probably create inflation when they need to because they use it as a tool. These stocks will then at that point, you'll start to see better structures develop. But right now, I don't have much optimism here, even though you are at good prices, right? Just like the garbage altcoins, they look very similar. If you're looking to invest in these, keep it small and be prepared for these things to go to unreasonably low prices. I mean, look, not too long ago, Newmont was at 52.89. Okay, almost what is that? Like a little over a year. That's about more than a year ago. No, less than a year. I'm sorry, less than a year ago. It can get there. Okay, it's possible. So again, I'm not giving you absolute forecasts here because no one can, but you can account for that risk. Or if you say, well, I was thinking about investing $10,000. Well, okay, do it small, right? Do $100 at a time, do $500 at a time, keep it small and build your position over time because we're probably not going to see these things turn around for at least another year or two. Now, when we have some political changes in this country, which, they're coming soon, then maybe monetary policy will change. In that situation, if we get a friendlier business environment, that means inflation will be coming right back into the market and these things will start to do better. Does that make sense? And you may have a nice position accumulated by that time, which then you continue to accumulate as the market improves, right? But you'll have a nice inventory from a nice low average price if you do it carefully. Again, keep in mind, these things can get beat up way beyond what you may think. So you have to account for that. Right. So if you're like, all right, well, instead of putting in all 10,000, if I'm averaging in $5,000 over the next 5 months, okay, no problem. And, I'll stop there and see how we go, see how it goes. The 5,000 gets cut in half and it's only worth $1,500. Well, hey, you know what? At least your other 5,000 is still on the sidelines and you haven't put it in the market yet, waiting for things to improve. It's a much better way to do it that way. And it's, people don't like that technique because there's no promise of making $1 million the next day. There's no, oh, $5,000 a day type of return. What do you mean I can't make 100% a month? I mean, everyone makes 100% a month, right? It's none of that nonsense. We're talking about reality here. No one likes reality, all right? Especially in this game. Okay, so good question. Hope that helps. Things like gold, things like Bitcoin, store of value, they're going to have a hard time in this environment. All right. So that was the gold stocks. Thanks again. Okay, no problem, Miami. Has the S&P bottomed? Okay, I answered that question. Jason, no, I don't think so because the bonds haven't bottomed yet. Burak, could you please look at dollar Turkish lira? Sure. USD, TRY. So we were just talking about the Turkish lira, right? The valuation of this thing. So let's see what's going on here. Let's start with the weekly chart. Now look at this. Interesting. This is the dollar, right, against the lira. So if you invert this, right, the lira is basically in the toilet. Now, you have a double top up here. So that's interesting, right? That's interesting. And it's trying to pull back off of that. The dollar is trying to pull back, but you cannot ignore this overall structure. You can't ignore that. So we still have to argue that it's bullish. You have a weekly pin bar developing. Let's go to the daily chart now. Okay. And I would be looking for a higher low to develop. Right. This is actually, we only have one day of the week. So it's also a daily pin bar. It's the same candle. And as the week continues, that the weekly candle will change until it closes. I would be looking for the next support on this thing, right? It's old resistance right here, which is what? 1489. Looking at that. You also have this price action back here. If you notice something, okay, see these two tails over here, right? Those two tails on those candles. If you notice something, this general area, old resistance, clear cut, someone stepped into that or whatever, right? There was some kind of selling activity there, very dramatic. If you see, it's trying to find support in that area. So this is a potential support area, all right? As far as swing trades go, we have to see. There's no buy signal there yet, but it's reasonable to anticipate a buy signal either there or in this lower area right here, okay? Can a buy signal develop somewhere in between? It can. So keep that in mind. Your general structure here is bullish. I don't know what the economic situation in Turkey is, but if their bank, the central bank, may be making some moves that can affect this as well. So something to at least be aware of. Like, for example, here, in the US, I'm pretty much aware of what the central bank is doing. And as long as they keep doing what they're doing, I can still keep my general point of view in place, right? Because they're going to keep strengthening the dollar. If the dollar continues to strengthen, right, where do you think this is going to go? Especially if Turkey isn't doing anything dramatic to reintroduce value into their currency. Okay, again, I'm not familiar with the economy there. All right, so I hope that makes sense. But yeah, I would be looking for longs. If we're just looking at a chart, I would be looking for longs to develop and then give it a chance, which means weaker lira, stronger dollar. All right, I hope that answers your question. Is it possible to check on Nike's earning? Okay, I don't look at company reports. I mean, if you want to see the stock, let me see. What is that? Is it NKE? Yeah. So we can look at the stock. I could care less about their report. Well, the market hasn't closed yet, right? So they probably haven't come out with their report yet. I mean, if you look at today's candle, it's developing a lower high. This is a consumer discretionary stock, I believe. It's going to follow the market. It doesn't matter how great their stupid sneakers are. It doesn't matter. Okay. It doesn't matter the company fundamentals carry very little weight relative to economic fundamentals, right? It doesn't matter how great their CEO is, and then they recruited him from some stupid consulting firm and blah, 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 blah. It's all just a good story to attract investors. It doesn't mean anything, all right, when it comes to economic fundamentals. So keep that in mind. It doesn't matter how good the report or bad report is. This chart stinks. Lower highs and lower lows are likely. You have this little double bottom, right? The S&P just recently had that little rally. The S&P turns the wrong way. This thing's turning the wrong way too. So it doesn't matter how great or not great their company report is. If their company report comes out more negative, this thing has more room to get hammered because the environment's bearish. Does that make sense? So I would never bet on company fundamentals because they're nonsense. It's what Kramer uses on his stupid TV show to convince investors to get into stocks and stuff, right? It's just a good story, just like a white paper for altcoins, right? It's just a good story. That's all it is. All right. So good question. Okay. Please take a look at KWeb. I am in it, looking to add. I think I should wait. All right. So let's take a look. KWeb. It's an ETF. Let's take a look. All right. Let's take a look here. So you're long. You're looking to add. Let's take a look at the weekly chart. Ooh, yeah. Well, this is definitely not a place to add to your long. It's great that you're long, but look where you are. This looks very similar to like the S&P situation. Look where you're long. I mean, look where this thing is now. Potential lower high developing. Yes, you have a higher low in place. That's nice. But man, this thing has a long way to go before it proves anything. It's got to take out all these resistance levels. So as far as putting on more inventory, I would wait. Okay. I would wait give this market a chance to test this area here. This higher low is at 24 even. I would give it a chance to test that, or possibly this low, which is what, 20 even. I would give it a chance because you're not missing anything. All right. The market still stinks. Bonds are still not favorable. So testing the low is a greater possibility. Does that make sense? So that's where I'd be looking. If you're looking to add, you might as well wait because you're not going to miss out on anything. All right. And if it doesn't go that low and you want to add, somewhere in this, if you get a buy signal somewhere in the midpoint area right here, okay, you can add there. But there's no reason to add here at this high. There's just no reason, especially if you've done your add for like this month. Waiting is, I think, a much better thing to do. You're giving the market an opportunity to give you better prices. And there's a better chance in this environment that you can see better prices. Does that make sense? So good question. Thank you for bringing that one up. All right, let me jump over here to the other one. So I had Alphin okay, those answering my question. 2498, HTC Corporation, Taiwan, broke some resistances. All right, 2498, Chinese stock or Taiwanese stock. Let's see, can I get that over here? 2498. Oh, I have to type in letter first. Okay, 2498. 2498. Let's take a look. So is that right? 2498. No, I'm not getting HTC. Let me just type in HTC. And let me see, Taiwan Exchange right here. Okay, here's HTC. Is this HTC? No, Pure Energy. No. Okay, hold on. HTC. Let's type in this. There we go. Taiwan. Okay, there. I think this is it. 2498. Hey, you gave me the right number. I don't know why TradingView wasn't giving me the right stock. All right, here we go. So breaking some resistances, you say. Well, let's take a look. So first thing I notice, well, I see a wave structure there, right? Took me 2 seconds to recognize that. We have waves 1 and 2 right here. That's clearly fits the description of a wave 3. Okay, and wave 4 does not overlap wave 1. Okay, great. So you have a wave 5 in progress, it looks like. You took out, this is a weekly chart, by the way. You took out this resistance and you have this gap today. All right, so those are all good things, okay, in an environment that's not that good. So here's the thing. If you're not long HTC, this is not the time to get long. Definitely not, especially after this gap. I mean, you're gapping right into this, look at this, into these these resistances. I mean, look where you are. So I certainly wouldn't be buying this thing now. Only people that can't control themselves and are full of greed or that whole fear of missing out nonsense buy into that. So I would wait, okay? And look at the old resistance right here, which is what is this high here? 50, 20. So basically 50 even. It's a nice whole number. You look for a retest of that, okay? That's this area right here. Look for a retest of that. That would be your first spot if you're looking for a swing trade. If it can't hold there, then you're looking at test of low, all right? Possible double bottom or even triple bottom. What is that? 42.60. So those are the levels that you want to pay most attention to, okay? Don't chase this thing, no matter how good it looks. But that's definitely a nice change. certainly if other markets looked like that, I would be impressed. Like if the S&P gave us a look like that, I'd be like, wow, that's certainly unusual. That would be unusual for this type of environment. If the bonds looked like that, then we have inflation party coming, right? So that's a nice example of what a trend change can start out looking like. So in this situation, it would be reasonable to anticipate higher lows and then a higher high. So that's what I'd look for. If this thing, keep in mind that, like I said, since the environment is not favorable, this here could easily turn into a fake out, all right, which is the other side of the equation here. And this thing can eventually lead to a lower low. So don't rule that out. If it breaks these supports, then this is just nonsense. This is nothing but noise and hot air and too much hype. That's all it is. So we can't make that judgment now. At this point, since we have the technical break, I would look for the supports, right? Look for the buy signal at supports. If the supports break, then I would say, okay, you know what? The environment is still in control, and this thing is not going to break the trend of the environment, which carries a lot more weight. Does that make sense? Okay, so that was HTC. Thanks for asking. Hey, Matt. Okay, so I covered the NASDAQ. May need to wait for a higher low. Yeah, certainly. You have plenty of time to wait there. Okay. Yeah, Alex. So I pointed at the wave 4 in the weekly. Great. Good observation. Okay. Yep. You got that. Nice observation there. Okay. Levent from Turkey. All right. Cool. Welcome. So Douglas wants to see GMT, USD. So like I said before, altcoins, USDT. Let's look at Tether. I remember this one was the talk of the flavor of the week not too long ago, and it got hammered, right, along with the Bitcoin hammering. So, like I said, if Bitcoin can't do it, where do you think these are going to go? First thing I see here, resistance. I see a bearish pin bar off of resistance, right? The bearish pin bar high is, what is that? Just over $1.10, right? Bearish pin bar resistance. Can't even get into that area right there, which are your resistance levels. Now, that's a sell signal. Have we taken it out? Let's get in a little closer. Yeah, we took out the low of that pin bar. So you have a sell signal in play, but it's not following through. All right. At the moment, you have a green candle here. So this candle can easily turn red, though. I wouldn't go long. That's for sure. I don't short this market. I don't short altcoins. I don't short Bitcoin. I'm not going to start now. People ask me why. I don't like to use leverage in these markets. And there's other markets I can short that are going to do the same thing, that are much easier to access and all that other stuff. All right. So if I was looking to short, this would certainly be a signal to short. And I would be looking for a test of low. Okay. Just like Bitcoin can test 17K, the possibility is pretty decent here that this thing can test that level. Will it break the level? I don't know. But a test is within reason. So that's what you have to prepare for. If the market doesn't give you that test, meaning the market finds a higher low somewhere in here, which is always possible, then you need to be prepared to adjust. You need to, if you're short, you need to get out of that short. You need to do something. Take your profit, take your loss, because a short should not stop there and reverse. That's not what it should do. It should continue. You should see red candles going right into that low. And if you see some large red candles doing that, right, and I would be expecting Bitcoin to be doing something similar, I'd be expecting the break, okay, in that situation if you get those large candles. Otherwise, like I said, if there's hesitation, then prepare to adjust. Bitcoin should be showing you a very similar picture. Does that make sense? All right, so that's GMT. Thanks for asking. Again, these altcoins, there's no value to them. They're pure speculative assets, and we're not in an environment for them to have any type of sustainable rallies. So, if you got into this thinking, well, look, some fake guru said that this thing is going to be the next blah, 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 and it's going to go back up to its highs. That's just noise, okay? There's no reason for these things to go anywhere. It's possible that they some chat room somewhere sucked a bunch of people in, and that's that. All right, so keep that in mind. We're not in the environment. All right, Douglas asks, anywhere in the U.S., Miami. Didn't have to think about that. Alex, stocks and crypto look like they're going, okay, right. Yeah, so they are poised to break lower. Whether they break lower or not is up to the market, but certainly looks that way. Now, when things look obvious like that, you have to be more careful, because if it's obvious to you, and it is pretty obvious, I mean, look, lower high, lower low is likely. If the whole world sees the same thing, there may be too many shorts at the moment. So just be prepared, okay? That's why you need to be prepared for the adjustment and don't get stuck in an absolute opinion. Like, oh yeah, market's weak, environment sucks, bonds are not favorable, this thing has to make a lower low. Don't ever think something has to do something. It might, there's a good chance that it does, but if it does not, be prepared to adjust. I can't repeat that enough times. Okay, Ben from Toronto, good to see you. Okay, David from Miami. Your article from yesterday is very good. Oh, cool, Ben. I'm glad you like the article. My articles in recent time have not been doing very good number-wise. Maybe people are just not interested in Bitcoin anymore. And I notice other fake gurus will jump at like popular stocks like Apple and all that other nonsense, which, marketing-wise, it makes sense. One thing fake gurus are very good at is marketing. One thing I'm not very good at is marketing. Okay. And I suffer for that. Any comment on rates? Okay, REITs. Well, look, so you're talking about basically stocks that involve property. Rates are rising, right? So that's certainly bad for people that have to borrow money that are going to be buying properties. So that's the way I look at that. I don't really have much of an opinion beyond that when it comes to properties. All I know is if I was going to buy a property, I would price in rising rates. And I would say, hey, listen, you want how much money for your stupid property? I'm going to cut it by 10% because rising rates. I won't be able to sell it, right, for the price that you want because rates are rising. So keep that in, right? Keep that in mind. That's all I'd have to say. If they're suffering right now, I don't know. If you give me a symbol, maybe give me a specific symbol I could take a look at, but I wouldn't be surprised. They're not going to do well in a rising rate environment. If it costs more money for borrowers to borrow money, there's going to be less borrowers, right, and less buyers. Okay. Golden. Oh, from Belgium. Cool. I got my Belgium following developing here. I think Steen is over there in Belgium. All right, cool. Belgium. I have some Belgian waffles. Could you please look at LCT USDT? LCT. All right, let's see. LCT USDT. Okay, let's see what that is. LCT. Is that the right symbol? LCT USD. How about that one? I'm getting Litecoin. LC. Yeah. Do you mean Litecoin? Typed in LT. What is that? LCT. Maybe you mean LTC. I don't know. Let me know. All right. But anyway, if you're talking about Litecoin, everything I said about Bitcoin applies. And this thing looks like garbage. Lower high, lower low. I mean, in my analysis in 2 seconds, that's it. All right. Let me know if that's the correct symbol, and I'll talk about it in more detail. But it's pretty much the same as Bitcoin. All right. Thank you for the stream. Which bonds are better to follow, Gage? 10-year note. Really, the 10-year note's a good reflection. There are other bond treasury markets, right? You have the 30-year, you have like the smaller notes, like 2-year, but the 10-year note is a good one. All right, it's a pretty solid gauge. Okay, and when they look for like a recessionary signal, they usually look for the 2 and the 10-year notes, right? They want to see if they invert, if the yields invert. If they invert, then that's proof of a recession. So 10-year is very meaningful. Okay, so moving into invested in stocks, no. Okay, stocks, these altcoins, let me see. So altcoin, the money is not going into other assets. The money is probably just coming out. Okay, going back into dollars because dollars are getting stronger, right? Certainly not stocks. Some stocks are going to benefit more than others in this type of environment, but in general, stocks are going to suffer also, especially stocks that are heavily dependent on borrowing money. Okay, so good question. What is the best symbol to monitor bonds? Okay, so I just answered that question. 10-year note, ZN1, exclamation point. That's the symbol. All right, what is the best symbol? Okay, I answered that question. Thank you for your analysis. Oh, another guy from Brazil. All right, William from Brazil. Obrigado. I'm getting some more Brazilians. I like Brazilian bass, by the way. You got some good music producers in Brazil. All right, so I'm very familiar with a couple of them. Okay, let's see. Greetings from Milan. Oh, okay. Buongiorno. Buonasera in Milan. Nice. Northern Italy there. Cool. I'm supposed to be Italian, but I'm really not Italian. Okay, so thanks for stopping by, Chris. Good to see you from Italy. Kim from Argentina. 60% inflation. All right. Well, hey, well, inflate. Argentina, a long history of inflation in Argentina, but that's why the country's always having problems. So yeah, you get by because you dance tango all day. But hey, that's cool. Yeah, inflation. Do you still have a currency though? Are you guys using gold? All right, I'm joking. I'm joking. All right, hey, Travel, good to see you. I'm sure you're happy. I'm sure you're very happy these days, but don't be happy. Be objective. Kai, all right, so this is my answers from earlier. Okay, that was a long time ago. All right, that's something we get through these here. Okay, Elijah, it's good to see you. All right, GAL Yo-Yo wants to see GALU USDT. All right, let's see, what is that? GAL USDT, real quick. What is that? Is this a new coin or something? Man, GAL. All right, so this chart's worthless. I mean, there's no technical analysis here. It's just like, I don't know, first of all, I don't know if this was true, if that's a bad tick, or if that's real. If that's real, man, someone's stuck in that one. What's that high there? 200. And right now, this thing is at $2.83, right? Who got hyped into that one? So this is complete junk. Don't know what to tell you there. Speculative altcoin. Wait until we get into a more speculative environment. I wouldn't go near this thing. It's complete garbage. Okay, complete garbage. So yeah, and you can't do technical analysis on this. I mean, even if I if I zoom in, right, and we look at some patterns, this is just, what is this? It's there's nothing here. Okay, especially when something goes from 200 to 2. Bad idea to get involved with. All right, if you want to invest in stuff, invest in. I mean, if you're going to pick this arena to invest in, altcoins, which are the garbage of the garbage, these are worse than penny stocks. Okay, then at least pick the best ones, right? Like a Litecoin or Ethereum or something, or a Bitcoin. At least they have name recognition and they're generally accepted. Not these garbage things that are just, they were hyped. All right, don't get sucked into the hype. All right, so thank you for bringing it up. Hey, Kai, Frank is okay, right? The Swiss central bank has, right? Okay, okay. I suspect another such event. Okay, yeah. So right. So I don't know much about the Swiss economy. I know that their currency is typically a safe haven, right? But yeah, I don't know. Okay, but thank you for the observation, though. Okay, Brazilian government bonds are paying 13.75%. No risks involved. Do you think it's a good idea strategy to stay in those bonds until well, man, 13%. That's a pretty good interest rate, though. But why is it so high? You say no risk involved. Why is it so high? I mean, can't imagine if the dollar was paying that. Like, that's usually in the U.S., bonds that pay that kind of interest are usually considered junk bonds, right? They pay you a very high rate because the bonds are most likely not going to pay you back. So again, I don't know that situation in Brazil. If that's true and it is risk-free, meaning they're not going to, the government is not going to go out of business, and they're going to pay you back your principal as they promise, then it's certainly, that's a good interest rate. It's certainly not a bad idea. I mean, I can't give you financial advice like that, but if something's paying 13%, that's pretty good. It's certainly a good place to keep your money and let it appreciate while things are stabilizing. Okay, but the U.S. bond market needs to stabilize. That's when that thing stabilizes first. That's going to be the first sign of the bottom. Why the U.S. stock market? Because we're still the world reserve currency. Okay, so anyway, but good question, though. That's very interesting. And reverse pat, right? So you want to go all in on stocks. It's never a good idea to go all in. It's always a good idea to dollar cost in. Okay, even if you want to start now in this bad environment, yeah, the environment may go much lower. There's plenty of room for the S&P to go a lot lower and all that. But if you want to start your small positions and build very slowly, it's never a bad time. At least you're not buying the highs. But just keep in mind, there's still plenty of opportunity to go lower. Okay, right now the bonds, like I keep saying, the bonds haven't turned yet. But it's never a good idea to go all in. I mean, by going all in, meaning, I'm assuming you mean, if you have $100,000, you're going to throw it all in. That's not in terms of risk, that's usually not a good idea. Sure, if things work out, you'll make a lot of money, but what are the chances that things are going to work out? That's really what you're betting on. And this is what people don't understand. They see like an opportunity. They have no way to gauge if that's a 10% probability of success or a 90% probability of success. They don't gauge it that way. They just say, yeah, I'm going to throw some money at that, and with no sense of risk or probability. Now, if you knew, if there was a way to mathematically, come up with a way to say, okay, there is a 10% chance that this bet is going to work, which means there's a 90% chance that it's going to fail. Would you still invest? Probably not. I hope not. Okay, why would anyone invest in something that only gives you a 10% chance of winning? But people do it because they have no sense, they have no way to quantify. Okay, and they just think it's all equal, and it's not. Does that make sense? So if there was a way to put a number on it, this only has a 10% chance of success. Most likely you wouldn't bet on it. Okay, and you should. I mean, a rational investor should not bet on that. And I'm hoping that by following my streams, you become more rational. But the irrational investor, the irrational one, does not gauge that, and they throw money at everything. Okay. So anyway, good question there. I just connected. Yes. No. So all right. So Tony, you just go back when I finish the stream. You can go back and watch it. Okay, Steve. Okay. 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 No problem. I hit the like button in advance. Oh, cool. I appreciate that. Yeah, people, if you want to press the like button, I guess that helps me. All right. Like I said, I'm a bad marketer, so like buttons can help me, I think. All right. Maybe on TradingView. I don't know. All right. Let me see what else we got here. Okay. XLE, the energy sector. All right. The S&P energy sector. Let's take a look. This is interesting. As we know, oil has gotten beaten up over the previous week. I mean, oil was at 120, and like the next day, it was like at 104. I'm exaggerating, but that's a pretty dramatic move for oil, right? Okay, hold on a second here. Let me just refresh this. Oh, okay, I got some likes on TradingView. Cool. Guys, press the like button. You better like me. I work hard to make you guys happy. I hope you like me. All right, so here's the thing. This is a great gauge right here for your energy stocks in general, right? It's the energy sector of the S&P. This, by the way, affects, I believe it's 3% weight on the S&P. And this at one time, this thing was actually holding the S&P. It was keeping the S&P going, right? And now that this thing, the party is starting to be over, that's just going to be another weight on the S&P. Now, here's the thing. General chart is bullish, right? It's been generally bullish in the face of a rising dollar. We are at support, which means energy stocks are likely at support. Oil, though, has been getting hammered, and the rising rates are going to eat into oil. Oil has been a geopolitical sensitivity thing. Once that geopolitical thing eases off, oil is going to have a hard time because the dollar is going vertical against it. And I'm surprised oil has held up as it has. But again, it's irrational. And just because, there's a logical relationship doesn't mean the market has to follow it. So if there is a geopolitical tension going on, oil is going to be affected. Oil is affected. So here's the thing. If you're aggressive and you're looking for the long and you want to take this looking for longs in the energy sector, okay, look, you have a buy signal there. But here's the thing. I would not be optimistic about testing this high. I would not be optimistic. You're better off in this situation if you want to go for the midpoint, right? This would be where you'd be looking for profit targets, whether you choose an energy stock or you pick the XLE itself, right? That's where you want to be looking to get out because there's a very good chance we get a lower high in here. Why do I say that? How can I forecast something like that? Because the dollar is nothing but strong and only right now poised to get stronger. That's only going to put more pressure on this sector, not less, right? So once those geopolitical tensions ease, this thing is going to feel the pain like everything else, right? Oil should not be this high with such a strong dollar. So just keep that in mind. The general trend is bullish. We can't ignore that. You're at a support level. We can't ignore that. There's a buy signal. We can't ignore that either. But we also can't ignore this this sharp momentum. That's pretty sharp. And that could be a fundamental factor right there, and you don't want to start having like an absolute opinion and be like, yeah, well, oil's generally strong and I expect the new high. You may get the new high, but I think chances are lower, especially in the face of that strong dollar. So something to keep in mind, right? Inflation a lot of times reflects itself like an energy, and the Fed, with the Fed on its fighting, stance, its fighting agenda. I don't even know how oil made it as far as it has, but again, it has to do with geopolitical tension and less with economic factors. Does that make sense? Okay, compared to geopolitical or pure economic. All right, I hope that makes sense to you. But anyway, thanks for asking. I hope that helps. Okay, Avi, from Israel. Hey, welcome. All right, the Nasdaq. Okay, so I went over that. Avi, I hope that helped. Nasdaq talk. Hey, Peter, good to see you. All right, Mr. Plow. Okay, no problem. Would Snow be a good buy at 128? Oh, Snow. I remember this stupid stock. I'm sorry, I'm not yelling at you, but I remember someone called this stock and I bought it like a moron. And I think it was like I forget, it was much high. It was like $300. I forget what it was. What a stupid idea that was. Anyway, yeah, I lost money on that one and it wasn't my call. But yeah, so double bottom here. Your question is it a buy at 128 or is that too premature? All right, so first of all, let's look back here a bit. Okay, now why are you saying 128? Is there a level there? Let's see. Let's look back. All right, I don't see a level specifically. 128. Is that the low? Let me see. Oh, I see. Okay, it's the low. So here's the thing. The structure, first of all, this is a speculative stock. It's a growth stock. So getting hammered like this, first of all, is no surprise in this environment. You're possibly making a lower high here. These can be very tricky. If you only focus on technicals, which a lot of people do, they're like, yeah, technicals only, right? You can get misled by this break. Oh, resistance break. Yeah, this thing, the trend is reversing. No, the environment hasn't changed. And these are growth stocks. These are the least likely to get anywhere. I mean, look at this move over here. Okay. And that's in an environment that's working against it. So keep that in mind. These type of moves, when it goes vertical like this, don't expect much, right? So I would say it is premature. If you're looking to build a position, no reason to be in a hurry. Let this thing, it's likely to test those lows again. If not, at least give it a chance to test the midpoint for a higher low. But this environment, it's not like, that higher low that I just showed you there, that could be tested in, a week or two. The environment, the favorable environment is not going to happen for at least another year or two, okay? Just that's the time perspective to have in mind here. So even if you do get the higher low, chances are you're not going to have an environment that's going to make this thing sustainable. So I certainly would not be thinking from an investment standpoint just yet. Like I said before, if you want to take smaller, like if you were thinking of investing, smaller bites, I think would be the wiser thing to do because you're controlling your risk. Buy one share at a time, I mean, so if it pulls back and tests and breaks those lows, you're not going to get shaken out of it and you're still going to have some shares. By the time these things turn around, then, and you've been building a position, like let me just use this as an example. What if you were doing that here, right? You were accumulating, and then this thing turns, okay, and it starts to improve, okay? By the way, this is when we still had the inflation before the Fed was fighting it, okay? So if you built a position there, of course we could say this after the fact, and you started to sell your position here, which, is not easy to do because everyone says it's going to go higher and higher and higher, but you were watching the bond market go higher and you're like, bond market's turning. I should probably take something off the table, right? Some of that inventory, that would have been the right thing to do. So can that type of cycle repeat itself? Yeah, but the bond market needs to be on your side. Right now, it's not. So accumulate if you're going to do it small. Otherwise, for swing trades, don't even bother. I mean, this is a decent mover, but you have to really be solid on that, and know that these things can turn quickly. So you can't have high expectations. Like for example, if you were trying to get like a long, let's just say trying to capture a move like this, you have to realize that there's very limited potential on these moves. We look after the fact and we say, oh, look, it went from here to here. I could have made that money. No, chances are you're not going to make that money, because here's why. If you buy it, you're most likely not going to buy the bottom. And if you try to hold it thinking, oh, I have to make this much, you're going to stay in it. Okay, first of all, which is and you're going to have expectations that are too high. And that's the problem with it. So you're not going to buy the bottom and sell the top. And if you sell it right away, then, that one time you sell it right away, you may sell it like real quick and it goes further and like, I could have made more. You're playing a random game. Okay. How could I have made more? How could I have maximized my profit? I need some kind of special tool. They told me it's a tool. Kramer, let's get the tool. Yeah, there's no tool. All right, I'm not making fun of you. I'm just saying. All right, so that's no. So thanks for asking. Thanks for bringing that one up. All right, let me see what time it is. Okay, couple more minutes. Do I have people watching me? Okay, I got some people on TradingView. How about over here? Less people over here. I don't know. All right, let me just see what else I can answer here real quick. And again, I appreciate all the questions and all the participation. All right, can you look at ETH? Okay, sure, Ali. I haven't looked at that one in a while, but it's going to be the same story as Bitcoin. All right, from France. Hey, David from France. And maybe, okay, please take a look at support and resistance levels on, okay, trust. Oh, okay. All right, so let me start with, what's this one here? What does one buy when they buy bonds? Is it government debt? So your treasuries, you're buying treasury bonds. Okay, yeah, so it is government debt, right? If you're buying bonds. But I mean, just keep in mind, when you buy a bond, you're getting a higher yield, but that assumes you stay in the bond, right, until maturity. So if you sell your bond earlier, you may be selling at a much lower price and take a loss. Keep that in mind. When you trade a bond, you're still buying and selling at a bond price. If you're trying to collect the interest, whenever you buy that bond, when you buy it, that interest rate that you bought at that time is locked in for the maturity. Okay, so keep that in mind. Bonds are not like this perfect thing. I just buy bonds. You have to stay in them, and you have to be prepared. So if you buy a 10-year note and you lock in that rate, and you decide, well, I'm going to get out like in 6 months, don't buy 10-year notes. Okay, does that make sense? All right. So I mean, I'm not a bond trader, but those are like basic things. At least if you're going to get into bonds, you really should understand the market and how those things work. Okay. How can you look at, okay, so let's take a look at Ethereum. All right, Ethereum. I haven't looked at Ethereum in a little while here. So let's see, I have an Ethereum chart with a level on, there it is, with the levels. Okay, hold on, let me turn that off. So look, Ethereum is just number 2 to Bitcoin, right? Number 2. Whatever Bitcoin does, this thing is just going to follow. Typically, it's a little more exaggerated. It broke these supports, right? Similar to Bitcoin. Look, it can't even get back there, similar to Bitcoin. And it's developing the lower high, similar to Bitcoin. I mean, the pattern almost looks identical, right? You have a sell signal in place, just like Bitcoin. So with all that being said, all that stuff I said earlier about Bitcoin, with the chance of getting squeezed into here, that all applies for Ethereum. This zone for Ethereum is going to be your selling opportunity as far as going short. If you're interested, that would be the place for aggressive and conservative shorts. The higher it can go, the more conservative your short idea would be. Like again, always account for that risk of being wrong. If this is the aggressive short right here, very aggressive. If this thing follows through, though, you're looking at test of low, right? Just like Bitcoin 17K. If Bitcoin tests 17K, Ethereum should be testing 879, okay, or at least close to it. Does that make sense? So use Bitcoin as your guide. Lower high, lower low likely, but it's obvious. I mean, we're seeing this across the board. And when it's that obvious, these things could be ripe for just one more leg higher like that. Squeeze out all the obvious shorts or get in too early. And then, then you may see more of the sell-off. So keep those levels in mind and keep those multiple scenarios in mind. This is not like a one scenario game. I know everyone wants that type of precision, but we're dealing with a random and highly efficient environment. So you need to understand what that means and that we have no advantage. So we have to keep multiple scenarios in mind, and we always have to account for the risk for each scenario. And we have to decide, is that risk for us or not? That's what you have to decide. And part of your sizing strategy is going to be a big part of that, which, I can't help you with here. All right. So take a look at, all right, let me just, I'm going to have to start skipping some questions now. I apologize. Let me just see what I have here. Brazilian bond market giving, okay, so I answered that one. Selling interest rates, it's a hedge as basically against inflation rate. Okay. I'm in the Bronx. Hey, all right, we got a guy from New York. I'm so happy to see New Yorkers. I had another guy from the week before in New York too. All right, I'm from Jersey. We're like cousins. All right, if you need an apprentice. Oh, yeah, no, I appreciate that. I can always use help, but no, right now wouldn't be a good time. But thank you, though. From the Bronx. We probably talk the same way. Okay, so I could see the Bronx from where I am, by the way. Thank you for your stream and analysis. Can you please check Rari bond? Thank you. What is Rari? All right, I'll try to, let's see. Well, no, you know what? I got to wrap this up. So no, I'm not going to check that. I apologize. Do you believe Bloomberg? Oh, okay. You're asking about mainstream financial channel. Okay, so here's what I'm going to do. I got to answer that question because that's a big topic for me. I have to answer that question. And let me just see what I have here in the other chat, and I'm going to wrap this up. But I have to answer that. If I missed your question, I apologize. I do this every Monday, so please come back next Monday and ask again. I'll be happy to answer. If you can, come early and put the question in the chat earlier because I can get to those right away. All right, so I answered the bond question. Why is oil high? Because free cocaine from the Fed led to economic activity. Well, okay, so I mean, possibly. Again, but I assumed it was geopolitical tensions that were driving oil further. Plus, there's a lot of politics that go on with oil. So there may be a lot of irrational things that are going on or things behind the scenes that we just don't understand, right? And we're always trying to point to reasons. So I don't know. All I know is oil is ridiculously high relative to a strong dollar, which is an unusual situation, which means whatever pressure is driving that oil, once it comes off, and the dollar keeps going where it's going, oil's got much lower prices to go. That's all I can say, with such a strong dollar. So we have to see how that goes. Trying to take away market share from Russia. Right. So again, political pressures, which can lead to a lot of outcomes that are just not, a chart can't really help you with. Okay. Right. There's been a lot of problems with that in the US. I buy bonds at 9.62 interest. Okay. I buy I bonds. Okay. Inflation is always a consequence of monetary policy. Right. That's true. And the Fed uses their tools, their monetary policy tools, to either create inflation when they need to or to take it away. Right. And that's how they stimulate the economy when it needs it or not. And the economy has been way overheated in recent times because of actions that they've took. And they have to do the opposite. Otherwise, we will be wheelbarrowing our dollars around and they'll be worthless. I mean, toilet paper will probably be worth more than our dollars if the Fed does not act. So they know, they have to. Inflation ruins countries. As many people here, I'm sure, have been in countries that have been ruined by inflation. No, right? So the U.S. is still fighting. At least they're fighting it. The bank is doing what they're supposed to do, at least. Okay? As messed up, as bumbling as they are sometimes, they're doing what they're supposed to do, and it will hurt people. But they're not here to protect people or make people happy. They're here to control inflation and manage the economy. That is their job, and to control the money supply, okay, and manage it to facilitate growth. That is what the Federal Reserve is supposed to do. All right. So let me answer this question about Bloomberg TV offers any advantage. If it's public information and you can't get any more public than that channel, okay, there's absolutely no advantage. It is like watching a cartoon. It's completely worthless information as far as making trade decisions. If you want to sound smart in front of your friends and you want to watch garbage on there and you can rattle, well, the S&P today made new all-time highs and the bonds, wow, he's so smart. He knows so much about financial stuff. Maybe if you want to impress women or something, okay, great. Otherwise, as far as trade decisions, managing risk, completely worthless. Now, comparing the stations, because there are other stations out there, that would be the ones that's more professional, at least in their presentation, but their information is just as useless as everyone else's. If it's public information, it's a cartoon. So, many years ago when I first started, I learned that's one of the first lessons I learned very quickly. Public information is useless information. So anything on there is useless. All right, so that makes sense. And that goes for not just that channel or outlet, but anything. Twitter, YouTube, TikTok. If you use TikTok for financial information, I'm sorry, but you should lose all of your money, because you have to be really mindless to believe that TikTok offers any real value, when you have 15-year-old kids who have no experience talking about financial information. I can understand if you're selling shoes or dating advice. Okay, fine. You want to get it from TikTok? Cool. But not financial. Not financial. Because you know why? They use hope, and hope is the worst thing you can possibly consume in this game, because it costs money, a lot of money. And that loss that may start out as a small loss can become very big. It can wipe out your account if you don't know what you're doing, or if you try to hope it back in this environment, which hope is certainly not going to work now. It works in a bullish environment because it requires no skill. You just buy and hope. Yeah, it's against me. It'll come back though. Yeah, all these fake gurus, they're all bullish. It'll come back, and it comes back. See, I told you it would come back. Right? And all these morons got in now, and now they're stuck. Okay, trying to hope it back. There's no hope when the Fed is raising rates. So if you know nothing about, look, you don't have to be an economist to do this. I'm not an economist, but I know basic economic things, okay, like interest rates. And if you don't know that stuff and you're just like throwing money into the market, yeah, it'll do this because of conventional wisdom, or even worse, if you're like an egocentric type of person and you make things happen. I'm going to tell you a quick story and I'm going to wrap this up. I talked to a guy one time, real egocentric guy, right? He had a business, made a lot of money in that business. And it was a type of business where, you make things happen, right? So of course, egocentric. And he's telling me about his trades in GameStop. And I was like, you should have heard this guy, right? And I did this and I looked at that. And he's so fooled by this illusion of control. And every time I would add something in, like he would just just talk over me and be like, oh, but this and that and this and that. And I'm like, man, you're going to lose all your money, man. That's all I can tell you. Because this game, you cannot be egocentric. This game has nothing to do with you. But we all start out, it's my money in my account, and I'm going to grow my account and blah, blah. We only think of us. But you must be the opposite, okay? You have to be passive in this game. And it's hard for a lot of people to understand. But the market knows all, and you have to be passive. And you have to accept what the market wants to do. It doesn't matter why the market wants to do it. It just wants to do it. And the sooner you can accept that, the better off you will be. You don't question the market. It goes this way because that's where it goes. Because the real information in the world is driving the real participants who have all the money, who have that real information, are acting on it, and order flow will go a particular way. We don't know why. It doesn't matter why. But they can still leave clues, and they can help us. They can help us gauge risk. So you have to be passive. People ask me all the time, what's your opinion on where Bitcoin will be in 6 months? I don't know. I have no opinion. The market tells me, and I read the market, tells me what it wants to do right now. And then at that point, I can determine if this market is offering me an opportunity that has a risk that's acceptable to me and my rules. Okay, because when it comes to making a trade decision, I trade rules like a robot, like an algorithm, right? It trades rules. It has no feelings or opinions. The algorithm, the robot, the auto trader just trades rules. Whether it makes money or not, it doesn't care. That is how you have to be. Now, we're human. Of course, we're going to care, but we have to minimize that. Rules at least help you. They help you get to that point of objectivity. And that is what you need in this game. Objectivity. Okay? That's the starting point. It would have been nice if someone told me that many years ago. Okay? But I had to struggle for a very long time before I realized that. Okay. Yeah, GameStop was all over the place, right? Any moron, again, could have gotten involved in that and made some money or lost some money. But it was just the ego that really, like, man, this guy's a mess. right? If you're egocentric like that. So don't let your ego drive you. You're not going to make anything happen in the market. The market is much bigger than you. Okay. And there's a lot, much bigger people out there that have much better information than you. Okay. Or me. I'm a retail trader. I'm a speculator. I have to guess. I don't have inside information like some people have. So I have to really be focused on risk, and I have to evaluate risk constantly. And when something changes, I have to adjust quickly, especially on smaller time frames. Okay. I also have to embrace the fact that markets are random most of the time. Not all of the time, but most of the time. So that means no one knows anything unless you have inside information. All right, people, I got to wrap this up. So I appreciate you taking the time with me here today. Okay. You like my rants, Elijah's cool. I try to fit them in there because that's what people come here to watch. So many. Okay. If you are a do-getter or run willpower and hope, not right. This is a very, back in my early days, they always just think this is a psychological game. It's just like, I really never paid much attention to that. Right. But it really is. If you don't have your inner game figured out, you are not going to do well. Okay. If you believe in these illusions that you have control and that public information is informative, you got problems. Okay. Because that all has to do with an illusion of control. The only thing we can control in the market is our decisions, is our actions and our risk, right? Which is a result of our actions. That's all we can control. Profits are random. People ask me, well, how could I have maximized? You can't maximize. There's tools you can use to estimate possibilities, but you're never going to maximize. If you happen to, it was random, like a slot machine. Embrace that. Okay. So it's super boring at heart, Kai says. It's looking at charts and always thinking risk reward. Right. If you get emotional, right. That's exactly right. If you get emotional, you lose usually. Yeah. Well, because that leads to irrational choices. And I talk to people all the time, they produce good analysis. I'm like, yeah, all right, that's pretty good. And then they don't follow it, right? Well, how come you didn't follow this? I don't know. Because you have emotional problems. That's why, right? Because you have the rational idea. If you can't follow it, then there's something wrong on the inner game, okay? And that I'm not a psychologist or a therapist or a psychiatrist. I can't help you with the inner game. I got my own inner game problems. Okay. But at least I have it figured out for the market, my inner game, and I can at least control myself in that area. Okay. So okay. No problem. Oh, appreciate that, Bill. Cool. All right. Yeah, I know you'll be there. Bill follows me no matter what I do. I appreciate that. Okay. Okay. So Miami. All right. Okay. All right. So I'm going to say this about properties. Like I said before, and I mentioned it before, with rising rates, it's going to be hard on borrowers. So I'm guessing, again, I am not a property expert by any means, but I would guess that because rates are rising, it's going to be hard for people to borrow money, right? It's going to be more expensive. So I would expect that there's going to be less people buying property, at least in this country. And also location has a lot to do with it. Some locations are going to be hotter than others. But if you're like in a middle of the road type of location where it's not really special, it's not like a celebrity city or something like that, where property values can hold themselves up, then I would expect property values to be lower. Like it's certainly going to be a market better for buyers, I think. Like I said, if I was going to go out and buy a property, I would be pricing in rising rates. And I would be like, we're going to cut this much off because if I buy it for your price, how am I going to sell it at that same price if rates are higher in the future? Right? It's going to be less people buying. So that's the way I view it. I could be wrong. Again, I'm certainly not a property professional, but half of these professionals are morons. And, a lot of them, they make money because they happen to be in a good location, right? And they do sales and they build their little following and they have their leads, right? And they do sales and they make the home buying happen, right? And then they think there's some kind of like special whatever. They're morons, half of them. It's unbelievable. And you talk to them about like economic stuff, you think they would know? They don't know. They're morons. That's the way things are. But anyway, that's my take on that. Like I said, I could be wrong, but I would imagine that it's going to put pressure on home prices, property values as well. But like I said, location is probably going to play a big factor in that. right? So if you think you're going to buy a place cheaper in New York City, you might get it slightly cheaper, but property values pretty much hold up in New York City, right? As an example, generally speaking. All right. Although they say the whole world is moving out of New York City, I don't know if the whole world moves out. I don't know how property values can hold up. All right. Okay. Okay. Oh, okay. Cool. All right. Good to know. Are you located in Miami, CEO? All right. So with that, I'm going to wrap this up. I want to thank you all. I know I always talk a lot longer than I say I'm going to, but I can't help it. I like to talk, and I don't talk to anyone during the week. So you're like I let it all out on you. All right. So let me just see what's going on here. Okay. No problem, you people. So again, thank you for taking the time to watch my stream. I stream every Monday, 3 p.m. Eastern time. So you can come back, check it out. Also, make sure you check out my TradingView article. I try to put some good insight into that. So again, you're prepared for the week. This is a game. It's about being prepared and being objective and focusing on the risk, right? That's what this is about. Not making ridiculous dream profits, which everyone tries to push on you. Please understand that this is the most deceptive industry that there is. This is worse than used cars. And people try to sell you worthless information most of the time because they can. Okay. And people are dumb enough to buy it. You would think with all the technology today and all the information available, people would be a little more informed, but it's less. It gives these people more ability to sell garbage to others. So just please keep that in mind and don't get sucked into all that mainstream nonsense. If it's mainstream, just automatically, hey, this is a cartoon, right? Can we get objective information from somewhere? Yes. Your chart will help you immensely in that area. Charts are not perfect, and that's coming from a CMT. All right. I specialize in charts. I know where their limitations are. Understand, charts can be very helpful if you pull the right components from them and know how to compare them. All right. All right. Cool, people. Cool. Todd. All right. All right, you guys. So no problem. Hey, I want to thank you all for, again, taking the time with me here today. I hope you got something out of this stream. I hope you come out of this more confident and more informed, not with the illusion of being informed, really informed. Okay. I don't sell hope here, and I don't try to push illusions on you. I want you to have a good sense of reality because you're going to need it in this environment. This is not a friendly environment at all. Okay. So I want you to be realistic and objective. That is the goal. All right, people. So again, thank you so much and enjoy the rest of your day or the rest of your evening, wherever you are in the world. Thank you so much for watching.